Alright, what's going on, everybody? Welcome back to another Athens video. And today's date is October 31st, 2017. So happy Halloween to everybody. I'm doing this video today. We had an excellent trading day. The members of the group, they know. If you guys, first of all, if you guys want to join the group, I'll leave a link below in the description. And I put up a lot of bank information, a lot of bank news. And in today's video, we're going to talk about how I get my trading ideas, and we're going to talk about COT reports and bond yields and yields. So we're going to basically get the whole momentum of the market, our fundamental analysis. We're going to go deep into it. So let's get started. So first thing we want to do is open up Google, and let's type in COT reports. I'm going to show you the importance of this. I put this up in the group, and I got messages saying, oh, they didn't understand. So this video is here now to give you a better understanding. So we're going to go to the commitment of traders. So we're at the CFTC website, and basically what this website is, for at least for the trading side of it, the COT reports, they come out every Friday, I believe around 2:30 or 3 o'clock. Around that time, every Friday. But the data is given to the U.S. the U.S. Commodity Futures Trading Commissions. The data is given to them on Tuesday. So basically, these banks and institutions, the corporations, they're required to give up their positions. I know it sounds funny. It sounds like a instant gold mine, I told you, but yeah, they're required to give up their positions. So we're going to teach you how to read it so you can have a better understanding of which direction a currency pair is going to go. So we're here at this website, the cftc.gov. You go here, and we're going to go to, sorry, my neck is hurting. We're going to go to commitment of traders. Just click that. And we're going to come down to the Chicago Mercantile Exchange, short format. So now, here's where the meat and potatoes is. I know it looks crazy, but when I break it down, you're going to understand it, and you're not going to look at it in a negative way. We're going to read this perfectly. So what we're going to do is, let me open up tradingview.com so we can pull up some charts, explain as we go. All right. So here's my TradingView account, Athens FX. So let's go back to the website. And today we're going to talk about the trade that we've been waiting for at least the past 2 or 3 days, which is the pound yen. The pound yen. We're going to talk about that, and we're going to break down the numbers. All right. So see, these are all my pairs that I look at right here. And I'm going to go over that in just a second. So first things first, here. Now, this report, like I said, is released every Friday, but the data comes from Tuesday. So basically, if today was Friday, this data was turned in to them on Tuesday. So I know it seems like we may be a little bit late, in which the data does come in days after. But you got to remember, guys, the banks and institutions, their moves are not right away. They take time to play out. So this is where this report comes into play. So as you can see, we got butter, milk again, lean hogs. These are just reports of futures contracts that banks and institutions and commercial businesses hold. They place it. You can see the information here. So we're going to go all the way down to the currency section. All right, so here we got the British pound, and we got the Japanese yen. So let's pull up the pound JPY. I'm gonna try to do this video as quick as possible, but I do want to try to go over everything so you guys can get a complete understanding. So pull up the yen interactive chart. Let's pull this chart back up. I know the numbers look crazy, but I'm going to help you understand it real quick. And once you understand the fundamentals, you know, like I always say, technicals, they're okay, but you know, there comes a point in time when you've been trading for so long, you get past technicals and you get into the fundamentals, because I think that's what really moves the market is the fundamentals. So let's pull it up. Let's make this a little smaller. All right, so let's pull up, what time frame did I have it on? Let's show you a better example. I think it was on 1 hour, so I can show you where the entries were. Okay, perfect. So if you're in my Telegram room, you definitely got this signal, and you are definitely smiling from ear to ear. And we're gonna break that down right now. All right. So you see, we have the British pound and the yen. It says futures only positions as of 10/24, that was a Tuesday, I believe. All right, so let's look at this. The first chart, we got non-commercial. We have non-commercial right here. We have commercial, and we have the non-reportable positions. So let me give you the definition. Non-commercials are the banks, the institutions, the hedge funds, basically like that. The commercials are the commercial businesses. For instance, like what you see companies on the stock market or whatever. Because they do trade forex too, but in a different way, because sometimes they have to move money overnight, blah blah blah, to like pay employees or whatever. We have the non-reportable positions. These are basically the retail traders. So you see how we go under non-commercial, we have long, short, and under commercial we have long, short again, long, short again. So now here it is. Pay attention. This is how you're gonna know the strength of a currency, and you compare it to another currency, and that's gonna tell you basically which direction it's gonna go to. But we're gonna add that with bonds. So let me show you. Okay, you see non-commercials. That's the banks, institutions, things like that. We have long, short. They have 66,000 orders in long, and they have 67,000 orders in short. The commercial side, we have 80,000 orders, 80,000 plus. I mean, the commercial long. Then we have commercial short, we have 83,000. So if you basically just go off of that, you'll say, well, we have more people short in the pound than actually long in the pound. So how did the pound gain on the yen? So let's go back. Same thing here. Let's look at the Japanese yen. Pay attention to my mouse. Japanese yen. Non-commercial, commercial, non-reportable positions, which are basically retail traders. This is the banks, this is smart money. This is the banks and smart money right here, basically. The non-commercial and the commercials. So long in the Japanese yen, we have 60,000 right here. And short, 176,000. Commercial side, long, we have 195,000. Short, 148,000. And these are orders that are being put in. These are orders that were put in on Tuesday, and we get this report Friday, every Friday around 2:30 to 3 o'clock. So I'll definitely put it up for you guys, since you guys are going to understand what's really going on. So now, go back to the pound. The number under it, where it says changes from 10/17, that's the week before. In the long, we have negative 6,000. That means negative 6,000 orders were pulled from the long side. You understand what I'm saying? So from 66,000, traders decided, some of the banks and institutions decided to take out 6,700 orders going long. Okay, so that's a big drop. So that means they're like, okay, we're not believing in the long. So now in the shorts, we have 67,000. And we have negative 177. So that's 177 orders pulled from the short side. But here's the key. If you match it up with the pair you're trading, it's like, for instance, today we did the pound yen. Look how many shorts we have on the yen. 176,000. So now if you compare the yen to the pound, who do you think is going to win this battle? The pound. Even though we have 67,000 shorts and 66,000 buys, look, we have 176,000 orders shorting the yen. That's letting you know the yen is going to become weaker, opposed to 60,000 on the longs. Now look, on the long side, they added 5,000 more positions. Okay, so that's going to be 65,000 from 1017. On the short side, they added 20,000 shorts. So if we get 20,000 plus 176,000, we're looking about rounded up 200,000 shorts on the yen, opposed to 67,000 shorts and 66,000 shorts. Who's going to win this battle? The pound is going to win this battle. The yen is going to get weaker. So now, if you want double confirmation, this is what we're going to do. We're going to go look at the bond yields and the bond prices for these currencies. I'm telling you guys, after you learn this, you're going to look at Forex trading in a different way. So now let's scroll down. We're going to go to the bond prices on the pound. Okay? So let's go to 1 hour. I mean, we look at it from a daily because it gets choppy as the time frame gets smaller. So bond prices are coming down. You see bond prices are coming down. When bond prices come down, that makes the yield go up. And when yields go up, that makes the currency go up. Because when the yields are higher, that's more of a attractive return for investors. So investors are going to buy into the pound because the yields are higher. They have an inverse relationship. So as the bond prices go down, it gets cheaper to buy it, but your return now becomes higher on the yields. So that's another confirmation of why the pound took off on the yen. So now let's take a look at the yen. Take a look at the yen 2-year bonds. The bond prices are going up. So as the bond prices go up, they get more expensive. Now this is just the bond price. Now let's look at the 2-year yield on the yen. See, the yen is shooting all the way down. The yen is coming down. That means it costs more to buy the bond it costs more. You see the bond coming up, the bond price coming up. It costs more to buy the bond with a much lower return. So now we see the yield coming down. If the yield is coming down, investors are not going to buy because they're saying, okay, it's going to cost me too much to get such a little return. So that's going to push the yen currency down. And if we come back to the reports, we see we have over 200,000, 176 plus 20,000 shorts they added last week, opposed to the numbers on the pound. So like I said, who's going to win that battle? The pound is going to win. So now if we look, I gave a signal. Go back to the hour. I told my members in the room, I said, okay, look, the pound is going to strengthen. I got information banks were going to buy the pound. And they were going to push the pound, and the pound was going to be the big mover this week. We got in at least around, I believe we got in around 149. And guess what? Look what happened to the pound opposed to the yen. It took off. You see what I'm saying, guys? So just by this little report, that's telling us the orders from these banks and institutions of how much orders they have long and how many orders they have short. And you align it with the yields. Come back to the yield. I'll show you guys again. That's a 1 hour chart. It's going to look choppy. We go to the day. Look at the yield of the Japanese yen. If the yields go down, the currency goes down because investors are not going to get a higher return on their money. So Bond prices go up, yields go down, currency goes down. Bond prices go down, yield goes up, currency goes up. And we can align it with the COT reports. This is going to come out every Friday. So, and this is basically what you call the fundamentals. Technicals, we can use our moving averages to help give us direction. And we can use indicators, the CCI. I use that, but I'm not really basing a trade off the CCI, but it does help me. But it's all about here, guys. It's all about here. We got the Eurodollar. And the reason why such big movers, especially for the pound, because look at the report showed this week. We got Canadian dollar, Swiss franc, we got the Mexican peso, we got the British pound, the Japanese yen, and the euro. We don't see anything for the dollar just yet. We got the Brazilian real. We don't see anything for the dollar just yet. So this is why the pound was the big mover of the week. We can come back to it. We can come back to it and see. We caught an entry around 149. Some of the members caught it probably a little bit higher, but they made this big move, and everybody had a success. Everybody had a good day trading today. So, I hope this video helps. And once again, this is the COT reports. You align it with bond prices and bond yields. If they align, then you know. We can come back and, like I said, we're gonna go over it one more time. We had more people putting short orders on the yen than the pound. So the pound was definitely gonna win that battle. Now what you can do is you can come on your chart once you find this information, and then you can do a little bit of technicals. You can go back from a daily chart to see that the trend was definitely going up. We had an uptrend. So after this big move right here they made, it came down. And after you got that information, you knew, okay, price is now consolidated right into a demand level. And I talked about supply and demand. And you see how it aligns up with the information on the charts. We catch a big move. All right, guys. So, I don't want to spend too much time on this video. I hope I cleared up everything on this. If you have to watch this video more than one time to understand where I'm coming from, because it can be a little bit confusing, I suggest you watch it more than one time. Because once you understand this, guys, your trading world will change. And until next time, it's Jay Athens.